Hello and welcome to Business Television India. I'm Abhishek Ranjan and you're watching Build Your Portfolio, a show in which we focus on fundamental analysis of stocks to help investors pick stocks on the basis of their strengths for medium to long term. Now, on this special edition of the show, we put together a list of companies that have braved the slowdown storm to emerge strong. Companies that have reported steady, strong Q1 numbers amid looming concerns of slowdown and stunted investment growth. Now, after a dismal 2018-19, delayed monsoons, consumption slowdown, lower commodity prices and fluctuations in the rupee, corporate India seems to be in a downward spiral. Expectations have never been more tempered and the markets haven't looked this gloomy in a long while. Now, at a time when a sense of despondency is looming large over institutional and non-institutional players, hope for revival in India Inc.'s corporate earnings may seem like a pipe dream. But as we mentioned earlier, on this special edition, we bring you companies across the spectrum from FMCG to financial services to auto that we like to call in fact, that has beaten the kind of mood that is currently prevalent in the markets and beaten the slowdown to come out with a strong Q1. In fact, let me first bring in amidst the FMCG space that is still faltering with muted growth numbers. A contrast story is coming from the consumption giant. In fact, we are referring to Marico here. The company reported over 25% profit, getting the number up to rupees 335 crores as far as the profit after tax figures is concerned. We spoke to Saugata Gupta, MD and CEO at Marico, to give an elaborate view on the same. Welcome to the show and thank you for joining us here on Business Television India, Mr. Gupta. First up, let me begin by asking you, it's been quite a steady quarter, at least at the face of it, for Marico, with 7% sales growth and 6% kind of a volume growth that you clocked. What would you say about your performance this quarter, considering the slowdown in consumption?
So when we started the year, I think we aspired to deliver 8 to 10% growth, but as the demand conditions are and also a combination of soft demand and some liquidity issues in the channels, we believe this year 6 to 8% volume growth will be a good performance. I think most of our portfolio is doing well. We have gained market share in most of the portfolio. We have an issue to solve in Saffola. We have I think and also the premium end of value-added hair oils, which perhaps is preventing us from getting into the double-digit space. Secondly, also while for us modern trade and e-commerce is doing well, there is a bit of a stress in the urban GT which we have to solve for.
So, if I understood you correctly, you are changing your guidance for volume growth from 8 to 10% to 6.8% for the financial year?
Volume growth, we have stated that, I think when we started the year, we thought it will be an 8 to 10. It was most likely to be a 6 to 8% volume growth in India.
And as far as specific segments go, Mr. Gupta, Saffola oil seems to be a pain point and has been for a year now. It grew just 3% this quarter. Where exactly is the issue and how soon can we expect a revival on that particular front?
If you look at Saffola, even last year, I think we had a 7 to 8% volume growth. There has been fluctuations between quarter and quarter. We have started on a weak, soft note, and as I said, that we have to get our price promotion strategy right in Saffola. So far, all the growths are coming from modern trade and e-com, but in urban general trade, we are not getting a transaction uplift. And I think there is also a bit of a channel interplay between modern trade, e-com, and general trade, which we are trying to solve. It will take some time, and I think we are keeping on trying. I don't think there is any issue on the brand equity. It is more with that price premium and the justification of the price premium and the promotion price interplay between the channels. And this is something which will take some time to solve, and we hope to at least get into a high single digits of the second half of the year.
All right. On the rural front, you mentioned that rural business has improved in traditional channels, but there are some issues with regards to the general trade channel in urban India. Can you elaborate also what has been the kind of traction in modern trade when you look at e-commerce and CSD channels in particular?
So CSD has a decent growth. E-commerce, again, we are investing behind driving premiumization and digital marketing as a capability, which has led to our e-com contribution moving to 3% plus. I think as far as rural is concerned, let me just give you a flavor. Rural per se, the consumption is soft. What we have done is we believe that over the long term, in a post GST scenario with perhaps a little decreased importance of wholesale and much more emphasis on direct rural distribution, we are investing behind the quality of rural distribution. So we have gained market share. I don't think the consumption situation in rural is still challenged. As far as urban is concerned, I think we believe that unless the consumption situation improves, while premiumization is being driven to a certain extent by modern trade and e-com, I think urban general trade also has to come into play for us to drive that growth in urban. So I think overall a combination of both channel liquidity and what the consumption is contributing to a slight soft category growth in CPG.
All right, Mr. Gupta, we saw increased sales promotions across category from the company this quarter. Is that the trend one can expect even going forward from here?
Yeah, so we would like to keep the A&P spends at 10%. We have in the last 6 months launched a significant amount of new products. They will need nurturance and innovation. So we will continue to spend and around 10% levels over the balance year.
Talking of one of the key input prices here, and we are referring to the copra prices, now that have come down by around 25% year on year. Firstly, what is your outlook on the prices going forward, and would you say this would be an opportunity for making margins, considering your focus for the last few quarters has been on increasing volumes and market share?
So again, for us, we will like to focus on volumes and market share at the expense of short-term margins. Having said that, I think we are pretty confident of delivering a 19% plus blended margin this year.
But can we expect further price cuts in the coming quarters? Any update on that front that you can share with us?
So if you look at the volume value numbers in Parachute, there has already been a 1% deflation. So we have taken some minor tactical cuts. There has been some also some consumer promotion price offs which we are doing. We are observing it closely. Normally what happens is the prices are soft during the season and it starts picking up sometime during October, November when it's the off season. So we will closely watch the numbers, and yes, if there is any need to pass on more value to the consumer, we will do that.
All right, Mr. Gupta, also can you take us through the performance of the food business? You have identified it as one of your focus areas in the past. So are you sticking on to that strategy, and how did actually the segment pan out for you?
So we have delivered around 28% growth, out of which the underlying growth in we believe that Saffola, the core, which is the masala oats, will continue to deliver around 20% growth over the full year. Fitify and Coco Soul has just been launched, and we'll be happy that if we can deliver in the next 3 years these new food brands reaching at least 150 to 200 crores.
Also, if you could give us a sense of the product pipeline, how is that looking like? What is it that you have in store for the markets?
I think we have launched quite a bit, and I think it's important to be nurturing them and get them to scale. We would be happy if at least 3 or 4 in terms of exit Q4 gets into a scale. So I think we have enough on our plate as of now, and I don't see significant new categories being launched. Yes, within the existing categories there could be some variant launches.
All right, and how much are these new innovations contributing to the top line?
So I think we have identified things like male grooming, premium hair nourishment, skincare and foods. Today they are in kind of a mid-single digits. They need to contribute to teens as far as the next 3 to 4 years are concerned. And I would like to see that number going up, but we would like to take a 3 to 4 year view rather than a very short-term view.
All right. And also, if you could give us a sense of the kind of revival in consumption that people are awaiting with a kind of demand slowdown that one is seeing on ground, especially emanating from rural India. What is your sense? Can we expect a meaningful revival in consumption anytime soon?
So I would say that we have to wait and watch in the second half what if there's a revival happens, because as of now we now have a visibility of July, it continues to be soft.
All right. With that, in fact, we'll slip into a very short break. On the other side, we'll focus on some other earnings, and we'll bring out the kind of players, the kind of corporates that have come out with a strong Q1 show despite the muted backdrop that we are currently in.